Ladies and gentlemen, let's get started. I'd like to call this joint meeting of the Rec and Ed and Ways and Means Committee to order. The purpose of this joint meeting is to hold a public hearing on the 2012-2013 operating budget of Monroe Community College. We will then proceed with the agenda items that have been assigned to both Recreation and Education and the Ways and Means. When the Recreation and Education Committee's items are finished, that committee will adjourn and we will complete the remainder of the Ways and Means Committee agenda.
Good afternoon, everyone. Would the clerk please call the roll for the Recreation and Education Committee?
Mr. Barker. Here. Mrs. Draw. Here. Mr. Gamble. Here. Ms. Cayley. Here. Chairwoman Valerio.
Here.
Would the clerk please call the roll for the Ways and Means Committee?
Ms. Andrews. Here. Mr. Antelli. Here. Mr. Daniele. Here. Mr. Gamina. Here. Mr. Haney. Here. Mr. Hanna. Here. Mr. McCann. Here. Mr. O'Brien. Here. Mr. Tucciarello is excused. Chairman Yolovich.
Here.
At this time, we will have a presentation by Dr. Ann Kress, President of the college. Welcome.
Thank you very much for this opportunity to present the college's budget to the committees. As most of you know, this is the conclusion of MCC's 50th year of service. And so we have been a proud member of this community for the past half century. And over that time period, over 457,000 students have taken one or more courses at MCC. So we have a wonderful track record, and our growth, I think, speaks for itself. MCC, as you well know, is among the top 15 associate degree producers in the country, which is something we have proudly been able to say for some years. We recognize that one of our key roles in our community, and I think it's probably never been more important than ever before, is workforce development. And about 91% of the students who graduate from our career and technical education programs are able to find work within the region. 84% of those students find work within field, which is very important. We have been a leader in career and technical education, serving our community, and in fact, it's one of the reasons why the New York State Regents visited us within the past couple months to talk about career pathways in K-12 education. We are also very proud of our partnerships with business and industry. So as we kick off our next 50 years with a strategic plan called Fulfilling Our Community's Promise, we recognize that one of the reasons for our success lies within the legislature. Your support throughout the years has been invaluable in helping MCC become a leading community college in the state and in the nation. And we want to thank you for that and pause and reflect on everything that you have done for us in the past and everything we hope you will do for us in the future. We take our responsibilities for our community very seriously, whether they're educational responsibilities about providing accessible and affordable access to higher education, or our fiscal responsibility. And so within that in mind, I'll walk through an overview of our budget. Our expense budget that we're proposing this year is $122.3 million. That is a reduction of $1.5 million when you compare year-on-year budgets. Our non-discretionary negotiating contractual payroll increases are really the main driver behind our budget this year. They have increased $1.2 million. So let me just underscore that we're managing to reduce our budget by $1.5 million, even though our costs are increasing by $1.2 million. We have reallocated and realigned resources in order to create efficiencies, and we have managed our position vacancies in order to create some cost savings within the college. For the second consecutive year, just to give you a sense of the leadership that we try to provide in my staff, neither myself nor any member of President's staff will be taking a raise, and in fact this year we're joined by everyone who is not covered by one of our union contracts. And we hope that this leadership speaks volumes about how the college wants to control costs. In terms of enrollment, nationally, if you keep track of this, community college enrollment, which was on a dramatic increase, has started to see a decline from those heights. MCC's enrollment has followed suit in this trend. In addition, we see more and more of our students are enrolling part-time rather than full-time, which will impact our overall full-time equivalent enrollment. We found that MCC's enrollment correlates directly to high school graduations, but also to unemployment rates. And that is something that as we look forward, we realize we need to do a better job of diversifying our enrollment and attracting more non-traditional students. So based on revised projections for 2012-2013, our student headcount is budgeted at 35,484 students, aidable and non-aidable, which is a year-on-year decrease of 3.6%. The budgeted aidable headcount, so in other words, what we would receive fundable FTE reimbursement from the state for, is projected to be 32,749, which would be a total of 14,800 FTE, and that would be a year-on-year decrease of 8.5%. The dramatic difference between the headcount and the FTE in aidable and non-aidable is largely due to part-time enrollment. In part, this decline indicates that we're fulfilling our mission. Students are coming through MCC and they're able to find jobs in the community, as I noted earlier. But in part, again, this has to do with our need to sort of refocus where we're aiming our enrollment goals at and focus much more on meeting the needs of non-traditional students. So student revenue, driven by lower enrollment, is projected to, of course, experience a year-on-year decline. This decline will be offset in part by what we're proposing this evening, which is a tuition increase of $80, and that would give us a new tuition of $3,140. Just as a side note, please understand that we have taken this tuition increase to our student body, and we have received endorsement of this tuition increase from our students as well. That would give us a 2.6% tuition increase, and that really falls within the range of the Consumer Price Index, which was important to us in terms of keeping our costs under control. It's also important for us that our tuition for the coming year falls well below the SUNY average, and in fact it's 18% below the estimated system average for the coming year for SUNY students at the community college level. We recognize that accessibility is very, very important in our community, and we want to hold to that standard. And we still remain the second lowest in terms of tuition of all SUNY community colleges. We're also much lower than the other regional options, Finger Lakes or GCC. So even with the proposed increase, I think it's important for everyone to recognize that MCC's tuition and fees are well below the cap on Pell Grants, which many of our most needy students receive, and also TAP requirements, New York State TAP requirements. So our feeling is that the neediest students can still access MCC and pay for tuition fees and books without accessing any loans or minimal loans, as long as they're able to cover their other expenses. State aid certainly plays into that. State aid reflects an increase of $150 or 7.1% over last year, and that is certainly positive to be now at $2,272. But in reality, over the past 3 years, state aid has declined 21%. So we are still $405 below where we really need to be if you go historically. And the funding level we received this year, $2,272 per FTE from the state, in fact maps to funding levels we saw over a decade ago. In terms of our sponsor contribution, it is projected to achieve $18.4 million, which would reflect our requested increase of you this evening of $500,000. That's 2.8%. Just so you know, this request is in fact 58% below the request that you saw from us last year. We are very mindful of the conditions that we are all in terms of the economy today. As a percent of net operating costs then, local share would grow from 19.3% in 2010-2011 to 21.5% for the coming year. That's significant because basically the formula at the state level is that the sponsor should contribute 26.7%. So that shows that the county has really achieved a great deal of growth and continues to move forward in that figure. In part, that has allowed the county now to include $611,000 of interest and rental revenues to the local share, which is certainly a positive development. Some of you may have questions about our fund balance. The proposed budget requires the use of $2.1 million in allocated reserve. And so based on current estimates, that will mean that our fund balance will decline to $10.1 million or 8.2% of gross budget. That still falls well within SUNY guidelines of 5 to 15%. For the 3-year period then, beginning in 2011 and going into 2013, MCC will have used over $8 million in fund balance during this difficult economic time. In many ways, we feel comfortable about that, and we know that when we build our rainy day fund, that's exactly the purpose of it, is to use it during times like these. But we're also very conscious that we don't want to take that fund too low, otherwise that leaves us very few funds for the future. One thing I would just add is that we've recognized that the mandatory recurring expenditures that we have as an institution, largely negotiated contracts, benefits, healthcare costs, are really growing faster than our ability to cover them with revenue, whether it's tuition or increased enrollment. And so that is something that as we go forward, we will need to rectify. I'll also say we're not alone. Certainly when you look around the state university system at community colleges or state operating institutions, everyone's in the same boat, so to speak, and we're all dealing with the same issues. So just in terms of other budget topics, know that we are still in continuing negotiations with our 2 bargaining units, and certainly the current economic situation plays into those, as does the notion that we continue to face, as does the county and every entity, increasing health care costs, and that we're increasing costs for our retirees as well. And then I think something specific to community colleges. We're starting to see more calls in Albany for performance-based funding in whole or in part among community colleges. Just so you know, MCC is well positioned to succeed should something like that come into play, but it would change fundamentally the way we receive aid from the state. And there is a study built this year to look at what we could do with performance-based funding around remediation, which is also a topic of great concern at the state level and certainly locally. We do see increasing number of students who come to us who are simply not college ready, and the question is, how do we serve those students? And then some of you may be aware that there's an ongoing state review of the chargeback formula, driven largely by downstate colleges and their relationship with the Fashion Institute of Technology. And so we'll see some outcome of that this year. And then just a couple notes before any questions. First, I know that how we deal with our GASB 45 obligation has been of great interest to the legislature. And so I wanted you to know that in their most recent meeting, actually, the MCC Board of Trustees has elected to cease funding its GASB obligations with cash. And so this was not a decision that we came to lightly, but it was driven by several motivations, and I will share those with you. The first was, I think, primarily a finding by our auditors that while funding GASB was a recommended practice, it was not obligated. And if you'll recall, what GASB relates to is the need for us to fund post-retirement benefits from the past. So these are historic costs that in the past were not funded with current dollars, and the desire now is to have enough reserves to cover them. If you think about it, it's sort of an absurd situation, because the premise is, what if tomorrow MCC were to close and we would have to pay off every single retirement obligation? Would we be able to do that with cash on hand? And so you can imagine that that generates a considerable amount of cash. The other thing is that not all SUNY community colleges offer post-retirement benefits. So you heard me mention chargebacks a minute ago. We cannot include this obligation within our chargebacks, which really starts to create some inequities in the system. Another is that as state funding has continued to decline, we've seen that the funds that we use today to fund our GASB obligation of the past have really started to impact some of the student services that we can deliver, and that's an untenable situation, as is the fact that by funding GASB obligations today, we're really asking current students to pay past obligations, which seems to have a certain level of inequity, especially since they're currently paying, as in part, the retirement obligations of current employees. So the college did make a difficult decision after a lot of discussion to cease its funding of GASB 45. And then finally, there were concerns raised last year about how we are handling our cash reserves. So SUNY puts certain restrictions on community colleges and all educational institutions about how we can invest our cash reserves. So we need to be conscious of that. And we did have discussions with SUNY over the past year about this. I will tell you that their advice to us as a community college with local control was that if our board were to pass an investment policy, then that would sit well with SUNY. And so what we will bring forward to our board actually just within the next couple weeks is the first draft of an investment policy for a first reading, with the notion that we would get an investment policy passed at some point this fall by the board, and we could move forward with that. Just to have you understand, we are very, very conscious of our status as a state agency, and that most of the funds that we have come from either the state, from taxpayers, from the federal government, or from our students. So our first obligation is really to invest those funds in a manner that would safeguard them going to the future. We also want to ensure that our funds are invested so that they apply or they comply with all legal requirements, that they safeguard the principal, that we have sufficient liquidity, should that ever be an issue for us, and then, of course, that they yield a reasonable rate of return. And just to give you a sense right now, the 10-year T-bill rate is 1.5%, and that is basically what our cash reserves are generating today. But we certainly understand why this would be an issue for the legislature in terms of responsible investment of these funds, and so we're moving forward with that. And so with that, I would take any questions.
Well, thank you, Dr. Kress, but questions would be more appropriate after the resolution has been moved and seconded. So you can sit down.
We will now hold a public hearing on the approval of the Monroe Community College's 2012-2013 operating budget.
Affidavits of publication and posting of the notice of the hearing were in the Daily Record and Rochester Business Journal, have been received, and are on file in the clerk's office.
Thank you. Is there anyone signed up to speak regarding the public hearing on the MCC budget?
There is not.
Is there anyone in the audience who wishes to speak with regard to the MCC budget? There being no one, I declare the public hearing closed.
Next item on the agenda is public forum. Ms. Rossi, is there any speakers to address either committee on this subject this evening?
There are no speakers signed up for the public forum this evening.
Is there anyone in the audience who wishes to speak or address this committee? There being none, I declare the public forum closed.
Members of the Recreation and Education Committee, you have the minutes from the May 22nd, 2012 meeting. They will stand approved as submitted unless there are any corrections.
Members of the Ways and Means Committee, you have the minutes from the June 27, 2012 meeting. They will stand approved as submitted unless any corrections are made by end of day.
We will now move to new business. Please note the asterisk and italicized print on your agenda for action by both committees. Mrs. Rossi, please read the item to be considered by both committees.
Referral 12-0221, approval of Monroe Community College's 2012.
Okay, moved by Mrs. Straw, seconded by Mr. Barker. At this time, are there any questions from the members of the Recreation and Education Committee? Okay, there being none, we will move to a vote. All those in favor from the Recreation and Education Committee signify by saying aye. Aye. Any opposed? Item carries.
And now for the Ways and Means Committee. The item is moved by Legislator Gamina, seconded by Legislator McCann, from the Ways and Means Committee only. Is there any, at this time, are there any questions from the members of the Ways and Means Committee? Legislator Haney.
Thank you, Mr. Chairman. Through you.
Excuse me, Paul, will you be directing your questions to
Yes.
President Kress?
Yes.
And would you come back up, please? Thank you.
Through you, Mr. Chairman, I have just three questions to ask. Because it impacts the college financially, how much is currently owed in unpaid rent by Monroe Sports Center, Inc., roughly?
Through the chair, I think our current obligation from is $1.4 million.
1.4 million?
Yes.
Through the chair, that's fully reserved, right? I mean, in effect, you haven't recognized any income on it. You've set up allowances for bad debts for all of that.
Through the chair, yes. We've also sought judgment.
Right. So if and when, both of which are key infinitives, I guess, you got anything, it would be, in effect, net gain to the college's bottom line. Is that correct?
Yeah, through the chair, yes.
Okay, thank you. Second question, through the chair. As I understand your presentation, there's nothing in the budget for what accountants euphemistically called GASB 45 or the other employee benefits program as in the past. Is that correct?
Through the chair, that is correct.
Okay. And in the budget for the year currently ending, that amount was $5 million. Is my recollection correct?
Through the chair, yes.
Okay. And thirdly, through the chair, your August 31 financial statements show that you had about $54.7 million of unrestricted cash, some of which was labeled allocated, but it's all unrestricted. That's an increase of about $7.8 million from the prior August. Is that correct?
Through the chair. Our 2010 total current assets were $56.7 million, and the 2011 for the same time period is $47.6 million.
Yes, but through the chair, your 2010 cash was about 46.8, right? The 2,064,000 and the 44,800,000.
Are you looking at the 2011?
2010.
Oh, 2010.
August.
That's correct.
Right. And at August 31, 2011, you've got 14 million of cash, 24 million of short-term investments, and then you've reclassified 16.5 million down and are calling it designated for the post-employment benefits.
Through the chair, that is correct.
Right, and they total about 54.6 or 0.7 million. So your aggregate cash increased about $7.8 million during the year. At the date of these financial statements last year, it was all still either in checking accounts or money market accounts. Is it still in just checking accounts and money market accounts?
Through the chair, yes. That's one of the discussion points was around getting
Right.
an investment policy with the board.
Right. What are you currently earning on the money market accounts? I know my own money market account is paying 0.1% interest. What's the college able to make on money markets?
It's 70, through the chair, 75 basis points. Across all of our investment strategies, we are earning about 1.5% on
So-
those dollars.
So you're earning about 0.75% on your money markets?
Yes.
Okay. As you said during your presentation, 10-year Treasury notes are currently, actually in this morning's paper, they were quoted at 1.39%, but they've been at 1.5%. So if you took a substantial portion of this money and put it into 10-year Treasury notes, you basically could double your interest income?
Through the chair, yes. I think one of our concerns, though, when you look at the investment policy that, and we'd be happy to share it with you after it made its way through our Board of Trustees, one of the reasonable rate of return is our fourth priority. Our first priority is to assure that we safeguard the funds that we have. We also need to look at the fact that we need to fall within what SUNY wants us to do with our funds, so all of the local, state, and federal regulations that accrue to public institutions. And I should segment us from private institutions, which certainly can do other things with their funds.
I certainly appreciate that and wouldn't encourage you to buy common stocks or anything like that. But if 10-year Treasury notes aren't safe, we're all in a hell of a lot of trouble. That's all my questions, Mr. Chairman. Thank you.
Thank you, Mr. Haney. Any other questions for Dr. Kress? Being no further questions, all in favor, please signify by saying aye. Paul? Please do.
Mr. Chairman, the committee will recall that last year I voted against MCC's proposed budget for two reasons. This year, I'm pleased to say that I'll be voting in favor of MCC's budget. And the reason for that is basically the same two reasons and what has developed over the past year. I was very concerned in the past about the inclusion in the college's operating budget of money to fund this so-called GASB 45 liability. Virtually no other unit of government has actually been funding it. And as I pointed out last year, neither Erie County nor Onondaga County Community College were funding it. And I note very pleasantly, and I thank the college for this action, the fact that they are ceasing the funding of this liability. I would note that while President Kress has noted a $1.5 million reduction in the overall college budget, if one adjusts the current year budget for this $5 million that was put in for GASB 45, the budgets exclusive of the GASB 45 provision are showing an increase of $3,500,000. That's an increase of about 3.1%. But still, I mean, that's basically the inflation rate. And I think it's to the college's credit that they're holding, even on the adjusted basis, their increase to the inflation rate. So because the college has recognized our concerns on this issue, as I said, I will be voting yes on the budget. The second issue is, of course, all of this unrestricted cash that is sitting in checking accounts and money market accounts. As of last August, as we said, it was almost $54.7 million. I remain very concerned about the fact that this huge amount of cash just sits in checking accounts and money market accounts. I would impress upon the college that, in my opinion at least, Mr. Chairman, it's imperative that the college proceed to a more realistic approach to investing this money and making some decent return. I mean, when we're talking about $54 million, an increase of 1 percentage point and the earnings on this money would be $500,000, which in fact is the amount that the county is increasing its support by. So I'm pleased to hear from President Kress that they're pursuing this issue. When they come before us next year, or earlier if they care to, that they can report that they've adopted a realistic investment policy and are using a realistic approach to the investment of these surplus funds. But because problem 1 has been resolved and problem 2 is being worked on, Mr. President, I will be voting for the budget.
Is there any further discussion? Ways and Means Committee only. All those in favor, please signify by saying aye. Opposed, motion carries.
Unfinished business to come before the Recreation and Education Committee. There being no unfinished business, the July 25th, 2012 meeting of the Recreation and Education Committee stands adjourned. Oh, thank you. The next meeting of the Recreation and Education Committee is scheduled for Tuesday, August 21st, 2012 at 5 p.m. Thank you.
You guys want to switch seats or whatever you got to do? Okay. We will now continue with the rest of the Ways and Means Committee meeting. At this time, we will have a presentation by Mr. Ken Dion, who is a partner, and Ms. Barb Loveland, who is a senior manager at KPMG.
I guess for the record, my name is Ken Dion. I am a partner with KPMG. I serve as the audit engagement partner on the audit for Monroe County. To my right is Barb Loveland. Barb is a senior manager who serves as the manager on the audit of Monroe County. Through our presentation, I'm going to talk a little bit about our responsibilities under professional standards. I will give a status of the 2000 audit and the results of the 2011 audit, and go through some of the required communications with you. I guess to begin with, our responsibility is to express an opinion on the financial statements that are prepared by management and are presented fairly in conformity with generally accepted accounting principles. Our responsibility is to perform an audit in accordance with professional standards, the AICPA auditing standards, and government auditing standards issued by the Comptroller General of the United States. Now, we plan and perform an audit to obtain reasonable but not absolute assurance that the financial statements are free of material misstatement, whether caused by error or by fraud. Now, we have no responsibility to detect non-material errors in the financial statements. With respect to internal control, we consider internal control over financial reporting as a basis for the design of our audit procedures. We do not render an opinion on internal control as one would do if they were auditing a public company. We do have a responsibility to communicate to the county legislature any significant deficiencies, material weaknesses, or material compliance exceptions noted in our audit. I'm here to report that we did not identify such instances. With respect to the status of the 2011 audit, we did issue an unqualified opinion on the financial statements. That's a clean opinion, and that's the best opinion that the county can receive from the independent auditor. We will be issuing they refer to in the government world as a yellow book report. It's a report on internal control and compliance at the financial statement level. Again, there will be no significant deficiencies, material weaknesses, or compliance findings in the report. We are in the process of completing the federal single audit of the county, and will be issuing our report as of September 30th deadline. I'm here to report there are no findings or items noted that would require to be reported to the legislature. We also will be issuing they call it SAS 114, letter. It's essentially a summary in letter form of what I'm talking about tonight. And it's a letter to communicate our results to those in charge of governance. In terms of significant accounting policies that are noted and actually reported in Note 1 to the financial statements, I'm here to report that the application of those existing policies have not changed. We're consistent with the prior year. And actually, they are consistent with similar governments in size and complexity. I'm here to report that there were no unusual transactions noted during the performance of the audit. With respect to management's judgments and accounting estimates, when looking at the financial statements, they're prepared by management, and they're embedded in those financial statements are significant estimates. So I'll give you some examples. The reserve for uncollectible property taxes, workers' compensation, and the GASB 45 OPEB liability. We reviewed those estimates and brought our subject matter professionals into the audit as part of the team and concluded that they were reasonable and reported in accordance with generally accepted accounting principles. Now, we did not identify any material corrected or uncorrected adjustments that were reported by management in the financial statements. Other matters noted, there were no disagreements with management in performing the audit. We received excellent cooperation, as we have in the past, from management in performing the audit. We were not aware that management was consulting with other accountants during the performance of the audit. We refer to that as opinion shopping. And there were really, in terms of, as I mentioned, there were no difficulties at all encountered during the audit. With respect to independence, we did not perform any services other than the audits I previously discussed, and we are independent both in fact and in appearance with respect to the county. And as previously noted, we will be we confirm these representations in that SAS 114 letter. That concludes my formal presentation.
If there are any questions, please direct them to me as the chairman, not through me, to me. Legislator Haney.
Thank you, Mr. Chairman. I note in your footnote 1B, the financial reporting entity, I note, Mr. Chairman, that you include some of the county's local development corporations. You include, for example, Monroe Security and Safety Systems, Monroe Tobacco Asset Securitization, Comida, etc. Through you, Mr. Chairman, and I understand why those are included. By the same token, I don't understand why Monroe New Power, Upstate Telecommunications, and Civic Center LDC, which are basically structured the exact same way, are not included. And I was wondering if, Mr. Chairman, if someone...
Mr. Adair, would you speak to that, sir?
Certainly, Mr. Chairman. Thank you very much. Appreciate the opportunity to speak about that particular issue, which is something that we discussed at last year's Ways and Means Committee, as it last year was the first year of inclusion of the M3S LDC. And the county goes through an annual review of component units and joint ventures and related organizations to determine the proper accounting under GASB rules and regulations as to whether or not an entity should be included in its financial statements. The entities that you identified, Monroe New Power and Civic Center LDC, are the two that are coming to the top of my head right now. Were not included due to the fact that while they are similar in structure, the nature of the services that they provide are very, very different than the other LDCs that we have included. I will, however, note regarding this particular issue, the Governmental Accounting Standards Board is currently undergoing a review of the two standards that they have out there, 14 and 39, regarding component units and the reporting of them. And as that information is actually vetted through their normal vetting process, We will be looking at those standards and probably going back through a redetermination on all of the entities that are not included in these county financial statements. And subsequently, there could be a change that some of those entities could be included based on the rulings of the Governmental Accounting Standards Board.
But through you, Mr. Chairman, what I don't understand is what really differentiates these two groups. I mean, all of them, the county is the only customer. The board members all serve at the pleasure of the county executive. I mean, the county clearly has control of all of them. What really differentiates? What is there different about Monroe New Power Upstate Telecommunications that differentiates it from M3S, for example?
Mr. Adair?
Through the chair, the primary factor that we've used in determining that those entities that you've referred to as being either related organization or joint ventures is due to the fact that the services of them are not core functions of county government, and thus we could go outside of, and I'll use the example of Monroe New Power, could be services provided by an outside independent third party, Rochester Gas and Electric as an example, for those services. And it's been concluded by us that we do not need to include them based on that factor. Similar factor used in coming to that conclusion on Upstate Telecommunications as well. And the Civic Center, LDC, is again the same similar type of situation in the fact that it's a parking garage and thus is a third-party type provided asset. And while the facts that you've stated are correct, the direction of our decision to not include them in the financial statements has been based on the types of services that they are providing and that those services could be secured elsewhere and are not a core function of county government.
Through you, Mr. Chairman, I guess the question is, could we really obtain those services elsewhere since we've got something like 20-year contracts with each of those corporations for these services?
Mr. Adair?
Through the chair, at the time and point when those particular entities were contracted with to provide those services, I believe that exact decision was made to go and keep them as local development or create them as local development corporations and have them maintain this service versus going out and doing it with an RG&E as an example. And the length of the contract, I guess I really can't comment on as to being a reason for being able to sever that agreement at this point in time.
The other question, I only have one other question, Mr. Chairman. We show an unrestricted fund balance in the general fund of $6.8 million, which indeed is good news after several years of either deficits or very small balances. Do I understand the way the numbers flow, however, that if we had paid all of the pension costs that were due in February of this year and last year, that is, that we had not elected to defer some of the pension costs, that the general fund balance would be in deficit?
Would that pertain to the audit, Paul?
Yes. It's the core of the audit.
Mr. Adair?
Through the chair, I think I can answer that. According to the standards that we have to follow regarding preparing the financial statements, the item that you referred to, notably the deferral of the employee retirement system payment, is not captured in the liabilities of the governmental or the general fund. Again, following the regulations or the rules that we have to follow regarding financial reporting. To the point of whether or not that would drive us into a deficit, it's speculation, on part, because I don't know what the dollar amount of that deferral is off the top of my head right now. But based on the fact that if we had to pay that particular invoice in full and had contemplated paying that invoice in full and with the development of the 2011 budget, other items in the budget from a financial standpoint would have probably been changed or delivered in a different manner to help continue to improve the bottom line or the fund balance of the general fund of the county.
As a follow-up, Mr. Chairman, if I understand footnote 12, the deferrals that we've exercised on the pension plan are about $14.5 million. Is that correct? I'm looking at page 69 of the CAFR.
Do you have those numbers, Mr. Dare?
Yes, I do. Pardon me, Chairman. I'm just reviewing the information on that particular page. And based on my understanding, yes, that would be a true number.
Okay. So, absent other things that could have happened, if we in fact had paid the pension bill when it originally was due for the $14 million, we'd have a general fund deficit. Is that correct? Absent other factors?
Through the chair, I think it's hard to speculate on that. I think because other activities would have taken place, it would have potentially kept the financial statements in the position that they're in. So to confirm your question, it would be impossible for me to do that because it's too speculative on my part at this point in time.
Thank you, Mr. Chairman.
Is there any further discussion? Hearing none, Mr. Dion, Ms. Loveland, thank you very much for your presentation.
Thank you. Thank you very much.
We will, Mr. Ross, we will now proceed with the rest of the agenda for the Ways and Means Committee.
Referral 12-224, amend resolution.
Moved by Legislator McCann, seconded by Legislator Daniele. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Opposed? Motion carries. Next item, please.
Referral 12-225,
Moved by
acceptance.
Legislator Daniele, seconded by Legislator Antelli. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Opposed? Motion carries. Next item, please.
Referral 12-227.
Moved by
authorized-
Legislator Antelli, seconded by Legislator Hannah. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Opposed? Motion carries. Next item, please.
Referral 12-228,
Moved by
authorized.
Legislator Hannah, seconded by Legislator Gamina. Is there any discussion? Hearing none, all those in favor, please signify by saying aye. Opposed? Motion carries. All right. Is there any unfinished business to come before this committee? Oh, all kinds of hands. Legislator Haney.
Thank you, Mr. Chairman. The committee, about a month ago, received from Mr. Adair the first quarter key indicator report. And I have a question about it. And it's just trying to, for my understanding of the report. Through you, Mr. Chairman, when we say at the end of the first paragraph that it is estimated that the county will end the year in a position ranging from a negative 1.2 million to a positive 1.8 million, are we measuring everything in that, all the revenues and all the expenses, or is that just a measure of an estimate of where the expenditure portion of the budget will end up?
Through the chair, that is a measurement of all revenue and expenses as of the end of the year.
So that includes the estimate, through you, Mr. Chairman, that includes the estimate for sales tax revenue as well?
Through the chair, that would be correct, yes.
Okay. And finally, Mr. Chairman, sales tax currently for the first 7 months is running well above budget, is it not?
Through the chair, at this point in time, yes, it is.
Okay. And that is factored into this?
Through the chair, what's factored into this is the results as of the end of March 31st, not June 30th. That'll be in the next, the second quarter key indicator report.
So through you, Mr. Chairman, what we factored in And I don't recall exactly where we stood at March 31 because the biggest portion of the sales tax, the first payment in July was a blockbuster. So this is what's included is however the first quarter results varied from budget. Is that what I hear you saying?
Through the chair, that's correct, yes.
And through you, Mr. Chairman, has the state, just for information, given you any explanation for that July 1st payment that was so huge?
Through the chair, no, they haven't. There have been some inquiries made as to that particular blip from a sales tax return standpoint, and we have not gotten a solid answer, and they are reviewing it at this point in time. There does appear at times at the end of quarters that they do sort of a catch-up payment from things that they may have, I'll just usually use the word held to make sure that they didn't overpay us during the quarter. So that could be part of it, but we have not gotten confirmation of that yet.
Yeah, I appreciate this. I mean, there's key punch errors that are made at the state level and all kinds of things which tend to reverse later. But okay. Thank you very much, Mr. Chairman.
Is there anything further and under unfinished business? There being oh, I'm sorry, Legislator Andrews. Ooh, I'm going crazy here.
Thank you, Mr. Chairman. I just wanted to take an opportunity to follow up on a couple of standing requests that I had submitted and discussed at a Human Services Committee meeting in May. I realize that's not this committee, but that committee has been canceled for 2 months in a row. And so there were several requests made in May that were supposed to be responded to in June. And even though the committee was canceled, I would still have hoped for responses. But I haven't received any either at that time or this week at what would have been the time for Human Services. So I'm wondering if it would be possible to get those requests responded to in time for full legislature, because they're now 2.5 months old.
I would suggest that you pick up the phone and call the pertinent people that you wrote the letters to or the requests to and ask them. It's not part of this committee.
No, I know it's not part of this committee, but because this is sort of a catch-all committee, I'm just simply asking if Mr. Helfer could respond, to the requests that have been submitted.
Have you tried to contact the people that you wrote the letters to?
I'm asking right now, Mr. Chairman.
I would suggest you contact them personally and find out. I don't know how Mr. Helfer would know that answer. And it's not germane to this committee, so I'm going to rule it out of order. Thank you. Any further questions? There being no further unfinished business, the July 25th, 2012 meeting of the Ways and Means Committee stands adjourned. Next meeting of the Ways and Means Committee is Wednesday, August 21st, 2012 at 6 p.m.